Pay me, pay me, pay me my silver now. Pay me or go to jail. Pay me my silver now.
Good morning. Bix Weir, Roota.com. With your morning horn disease, you're sick of chaga coffee. Looks like they're clicking the mouse again today to bring silver down. When will it end? I was listening to a podcast about spirituality and why we're here and all that, which I love. I love that stuff. But they came to a part where they said, you came down here for a reason, to fulfill whatever karma you need to fix and to teach and experience life here on the planet. And one of the things you need to understand is that patience is a virtue. Great term. Patience is a virtue. And all things come at the right time. I think there's still more lessons to be learned by everybody in the market, myself included, but especially people looking at price. If you're looking at the price of silver, you're missing the whole picture. It's got nothing to do with price. The price has been controlled for over 170 years. The price of silver has been controlled for over 170 years. What you need to look at is go back. You're in the Wizard of Oz. You've just walked into Oz's chamber and you see there's a little curtain over there. We need to pull back that curtain and see who's running things, who's pulling the strings and things like that. That's what we're looking for. Price will come in time. Everything comes in due time. If silver went to $1,000 today, the entire financial system would collapse. Completely, totally, utterly, boom, gone. Why? Because it would set off the derivative problem, $2 quadrillion. I'll get to that in a second. I also want to tell anybody who's into cryptos, the same thing's going on in cryptos. This is an orchestrated slam in cryptos, done by Gary Gensler, the head of the SEC, Rustin Benham, the head of the CFTC, along with Janet Yellen and Jerome Powell. Those are the four people on the President's Working Group on Financial Markets. They work with the Exchange Stabilization Fund, which is that secret arm. It's not so secret. Everybody knows about it now. That was invented with the 1934 Gold Act. In the 1934 Gold Act, it gave the Exchange Stabilization Fund, it's basically run by the U.S. Treasury and the New York Fed. It gave them the legal authority to rig any market. It even says any market can participate in any market. They don't even need money anymore. They can use derivatives because everything trades on derivatives now. So that's why we get it. Will they set the price of silver to minus $40 at some point like they did in oil? I don't know, but I know they can. That's the thing. I know they can set the price of silver to minus $40 or minus $500. They can also set it to $1,000 or $1 million. That's the power of computers and derivatives in markets. Just to prove a point, and I think it's important for right now, this is the Bank of America derivative position in silver, mostly silver, as of the beginning of this year. Now, I've been screaming about this for over a year that besides building up the Bank of America derivative position, which is basically them leasing silver from JP Morgan, I don't know the end term of the lease. If it's you have to pay back the silver, you can buy it at fair market value, you can buy it at a fixed price, probably it's part of the DOJ settlement where, by the way, if you didn't know, $920 million fine was paid by JP Morgan for rigging the gold and silver markets over 10 years that we were screaming about, 8 years. We were screaming about it to the CFTC. But part of that deal was, oh, by the way, you can book a gain of $1 billion. So they paid $920 million, and they booked a gain of $1 billion on their gold and silver trades. That's how, who says crime doesn't pay? $1 billion of JP Morgan's gains came from gold and silver when they shut down, when they had to pay that big fine. It is insane what's happening. But Bank of America, if you can see on this page that $28 billion right here in silver is about a little over 1 billion ounces at that time, at that price. 1 billion ounces of silver. Yes, the Hunt brothers only had like 110 million in physical. But look at the key is that all of this silver that they added in the last 2 years comes off this year. means they come to their end of the lease and they have to do what the contract says. It might be a payoff at $30 an ounce. I don't know what it is. Nobody knows that. You're not allowed to know that, by the way. It could be that all the silver gets returned to JP Morgan. I doubt that. I really doubt that. Otherwise, they wouldn't have booked the gain. That was the key. When they booked the gain, which was $1 billion gain, according to the lawsuit, that's how much they made on gold and silver. That means these leases are all fixed back ends. All you accounting people know this. If you have a fixed back end, it's not a fair market value lease anymore. So you have to book the gain. So when JP Morgan signed these leases, there was a fixed back end. We don't know what the fixed back end is, but it's not a return to the owner of the silver. By law, by accounting law, that gain has to be booked at the beginning of the lease. Right? We all got that? Okay. So we know that JP Morgan got rid of the 1 billion ounces to Bank of America. These are all one-year leases. It says right here, 28 billion in one-year leases. So here we are. Here we sit with our conundrum. What is happening to that silver? JP Morgan no longer has it. They booked the gain. They do not control it anymore. Is it going into the ETFs? No, there's silver coming out of the ETFs. There's silver coming out of silver is being bled by every warehouse. PSLV not so much. It's a closed-end fund. But where's it going? We do know that the U.S. Mint expanded capacity to make silver eagles. Greatly expanded capacity to make silver eagles. That's what the Mint director said in a letter to me. I have the letter right down here somewhere. It's over there. Ventris Gibson said they greatly expanded eagle capacity, except they have only given out 1/4 of their production capacity this year. So they expanded their production capacity from the past. They had a year when they made 5.5 million ounces. I mean, a month. In a single month, 5.5 million silver eagles. Just keep this all on your mind, and we're trying to build a framework we're opening the curtain. We're seeing that great and powerful Oz on his computer. All right. So we know Bank of America's leases end all this year. And what has the price of silver done? Down, 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 down. Why? There's some kind of mechanism at the end that they do better if it's a lower silver price. So they rig it with computers and derivatives. Now, I did hear Ted Butler was saying that although the commercials for the first time in a zillion years went long, I think they're back short again just a little bit. I'm not really worried about that. It's going to be the shutdown of the COMEX that I'm looking for. Because we cannot have a freely traded market when a derivative market that determines price trades in 100 times the underlying assets. 1,000 times, truthfully. Because they really don't have as much silver as they have in the warehouses. So that's where we are. The two biggest, now this is after this month, after December 2021, the OCC, by direction of JP Morgan, changed how they reporting of silver derivatives, and they added these two columns. They added gold to it to hide what was going on. Otherwise, we would have seen the silver derivative market in the graph just crash down. Why? Because Bank of America has to deliver. The two big delivery months are the third quarter, which ends in 10 days, and the fourth quarter was the biggest. I think the third quarter was about 350 million ounces, with the fourth quarter, 380 million ounces. This is leased silver with a fixed back end from JP Morgan, meaning at the back end, it is specified what happens to that silver. I think it's going to Warren Buffett. Every reason that Warren Buffett explained to people why he invested in silver in the late 1990s is happening right now. We do have a supply deficit. We are consuming more silver than we produce. Again, this first time in a long time. It happens on occasion, but first time in a long time, according to the Silver Institute that tracks these figures. We had a deficit last year. We have a deficit this year, and next year we're going to have a deficit too. That's why Warren Buffett invested in silver in the late 90s. That's at least why he said. It's not his true reason. True reason was to destroy the banking cabal. And I think that's happening right now. Working through Bank of America, Warren Buffett's, I think it's pretty much his only bank investment now. He sold all his other, or most of his other investments in banks and put it all into Bank of America. Why Bank of America? They do structured silver deals. The worst thing you can do if you're going to try to take down the banking cabal by buying silver is to go onto the COMEX and buy it, because they control that market. Or go into SLV, they control that market. If you go through someone who's in the market, someone who had the ability to lease all this silver, especially if the DOJ mandated it, I think that's what's happening. So there's your pullback of the curtain. And so if right now, maybe they did a bunch of naked derivatives on silver as well and can't find the silver, where would we see that happening? In the lease rates. Here's silver. Now, first of all, leasing silver is a joke. There is no economic reason to lease silver. Nobody. Jeffrey Christian tried to explain why leasing silver is good for jewelry companies. This is bullshit. Such bullshit. The only reason to lease silver is that somebody doesn't want to give it up and somebody needs physical silver in the short term desperately. Desperately. And you would see the lease rates rise, and there it is. Right there. Boom. All this year, the lease rates are rising. Anything over 0% is huge. Is huge. People lease it out at zero because the other person pays the storage if it doesn't leave the warehouse. That's the other thing. Can you imagine a company leasing silver, like industrial leasing of silver, and then they run out, they got to pay back the silver that they don't have because they already made their product. It's just the dumbest thing ever. The leasing of silver. Almost as dumb as the shorting of SLV. Every share of SLV you buy, according to the prospectus, an ounce of silver is deposited in the SLV vault. Right now, there's 50 million shares short. 50 million, that's huge. So 50 million purchases of SLV shares were done. The sucker of an investor who invested in SLV thinks that JP Morgan threw it in, or the authorized participants put that silver in the vault. They did not. They even admitted there's 50 million shares short. That's huge. It's gigantic. That should come down because we did see a slight uptick in the SLV inventory, but this thing's got to shut down. The derivative market in silver, it's all derivative markets. SLV is a derivative market. You think about the right here, this 28 billion of leased silver, Bank of America. That was the biggest Goldman Sachs trader said, that's all that the silver derivative shorts are the ETFs. Well, okay, is JP Morgan taking the silver they're the custodian of SLV and leasing it to Bank of America with a fixed back end? It gets a little complicated. But this is all part of Rustin Benham's plan. Remember, when the silver squeeze was happening in January, February of last year, Rustin Benham came on and said, we fixed the problem. We were able to tamp down silver. That's how they were able to tamp down silver. Take JP Morgan silver, give it to Bank of America. Bank of America shorts it massively in the market. And then voila, it ends up with Warren Buffett. I think Warren Buffett's directing it exactly right over to Ventures Gibson to make silver eagles. But here's another thing. JP Morgan, when they were buying the commercial contracts and buying the billion ounces of silver, were also buying massive amounts of silver eagles. Maybe these silver eagles are just going right back to where they came from. My estimate was they bought about 300 million ounces of silver eagles at only premiums of like $2 premiums, and now people have to pay $12.50 because you're not JP Morgan. If this all just pisses you off beyond belief because you're a silver investor and you see silver keep going down, you should be pissed off. Yell and scream at regulators. What a stupid name for them, regulators. Anyway, let's talk about regulators. This is an interview back in June. I can't even explain how bad of actors Jim Cramer, Gary Gensler are the worst actors. They both know the rig is in cryptos, and they're trying to keep the pressure down. Watch their acting when they talk about, oh, this is a very speculative asset. Jim Cramer's in on the game too. There was an agenda for this discussion on CNBC. It's to scare the little people away from cryptos. Listen to what they were saying.
Adamant that there should be some degree of coordination with the CFTC and you about trying to make it so that we have more clarity, let's say, on cryptocurrency. Where's the state of play crypto right now?
Look, this is a highly speculative asset class. We've known this for a long time.
First of all, we've known this for a long time, and we haven't done shit. We wanted people to get into it. We wanted people to get destroyed, so you go begging the SEC to come in and be the regulators. This all part of the plan. It's a lie.
Ups and downs of this speculative asset class, Bitcoin, and hundreds of other tokens. And many of these tokens offer the investing public, or the investing public is hoping for a return, just like when they invest in other financial assets we call securities. And many of these financial assets, crypto financial assets, have the key attributes of a security. So some of them, they're under the Securities and Exchange Commission. Some, like Bitcoin, and that's the only one, Jim, I'm going to say, because I'm not going to talk about any one of these tokens, but sure,
Bitcoin is a token, Gary. I'm not going to talk about any one of these tokens, but Bitcoin, let's talk about Bitcoin. It's one of many.
Predecessors and others said they're a commodity. Working together, there's two great market regulators in this country. I had the honor to chair the CFTC, a terrific agency.
Shocking! Terrific agency. The DOJ had to come in and do the job of the CFTC. They had 3 investigations in silver, and none of them came up with anything. Shockingly irresponsible to say that that's a good organization. It's pathetic. And then he got rewarded for bailing out the bankers with their silver rig, so he gets to go as the head of the SEC, a much more prestigious place.
The honor now to chair the Securities and Exchange Commission. A little bit different remits, a little bit different approaches, but working together with the banking regulators as well. There's work to be done there around what's called stable coins. There's a lot of work to be done to really protect the investing public. And many of these tokens right now are...
How did Gensler protect the investing public, or the SEC protect the investing public in Veritasium? Reggie Middleton said, please, come help me. I'm going to change the world and fix your fraud that you call your the Dow Jones Industrial Average, the New York Stock Exchange, the NASDAQ, the COMEX. I'm going to fix it so that there's no criminals in between the trades. And what do? They shut him down, they lock him up, and they lock up his tokens. The investors of Veritasium are pissed, and they should be pissed. The regulators in the United States of America cover up for the criminals behind the scenes. That's what Gary Gensler's job is. Anyway, the reason I bring up Gensler is he went before the Senate Banking Committee talking the same shit. But Senator Toomey, the Republican on the committee, of course, Senator Brown said, oh, yeah, we have to regulate. We have to be in charge of this. We can't hurt the little guy. Senator Toomey pulled out some really important things. Let me play a couple minutes of this, and I'll talk about it.
Thank you, Mr. Chairman. Chairman Gensler, welcome back to the committee. Good to see you again. The SEC, as we all know, has a critical role to play in protecting investors, maintaining fair, orderly, and efficient markets, and facilitating capital formation. Unfortunately, some of the SEC's recent actions and inactions raise concern about how well it's carrying out this important mission. Take, for example, the SEC's handling of crypto lending platforms like Celsius and Voyager. Celsius and Voyager were offering interest rates as high as 18% if customers would lend their digital assets to them. The firms would then lend that crypto to presumably other larger investors to make short-term bets on crypto markets. But once the crypto sell-off began, many borrowers couldn't pay their debts, and these platforms froze customer accounts.
That is exactly what Gary Gensler wanted to happen. He knew they would I was screaming. I went on the Litecoin Leases show. I said, no, don't do this. It's stupid. You're going to lose your ass. Third-party risk. The reality of these DeFi companies that were just completely off the charts ridiculous, Gary Gensler knew it from day one. They allowed this to happen to create the latest crypto boom where Bitcoin went up to 60,000, and then they started tightening the screws. So, oh, we got to regulate, and all of a sudden everybody tried to run out, but you can't run out of something like Celsius. And everybody lost everything. But they knew it was going to go down that way. They did this on purpose, 100% on purpose. If you're a crypto investor, you should be pissed off at these market riggers. These are the people facilitating market rigging to control the crypto boom. The guy before Gensler at the I don't remember his name. They call him the crypto granddad or something like that because his daughter invested in cryptos. Chris Giancarlo said exactly what they were doing. We couldn't let the cryptos run because they would just keep going up, is what he said. So they had to tamp down the price. He didn't say tamp down. He said we had to open up the derivative markets to cryptos to control the price. That was when Bitcoin hit 20, and that's when Chris Giancarlo kicked in. With Gary Gensler, he did it better because he understands cryptos better. He knows that everybody was going to get in. People chase the money. I want 18% interest, and it's so safe. They're holding my cryptos, and then bang. And then they tighten the screws, and now they're going to go after people. It's been 14 years, and the SEC hasn't come up with one rule for cryptos. It's still unregulated. Thank you, Mr. Toomey, for shedding light on what I've known for a while, that the regulators work to rig prices, they don't work for the little guy at all.
The SEC did take enforcement action against BlockFi for similar activities last winter, yet somehow let Celsius and Voyager continue through this spring when both companies blew up and found themselves in bankruptcy, with investors staring at billions in losses. Where was the SEC?
Excellent point. Where was the SEC?
And where's the SEC been in clarifying the rules of the road for crypto market participants? The chairman insists in his written testimony that, and I quote, the vast majority, end quote, of crypto tokens are securities. But he's also acknowledged that Bitcoin is not. Now, presumably that's because Bitcoin is so thoroughly decentralized. But that naturally raises the question, where on the decentralization continuum does a token cease to be a security? Now, most of these tokens don't even have a financial claim on the issuer. Doesn't that make these tokens very different from at least the vast majority of ordinary securities? And if the chairman is right that most tokens should be considered securities, then as he himself states in his written testimony, and I quote, it follows that many crypto intermediaries are transacting in securities and have to register with the SEC in some capacity, end quote. But crypto transactions typically can be settled in real time on chain and without intermediaries. As a result, crypto intermediaries often serve different customer needs, they've got different business models, and they pose different risks.
He just described Veritasium, by the way. Veritasium fixes all those problems so that you don't even need congressmen. You don't need regulators. You have peer-to-peer transactions of stocks and bonds and anything. And Reggie has the patent for that. Why did they give that patent? They have the ability to cut off patents. Did they give Reggie that patent to throw a monkey wrench in the entire crypto market? Because Reggie's patent covers pretty much almost everything outside of a normal Bitcoin transaction or normal Litecoin transaction. Yes, I do recommend having some Veritasium.
Than traditional securities intermediaries. All of that raises the question, what is the crypto-specific roadmap for these crypto intermediaries to register?
They don't want to do that. Then that will give the people working in the crypto world an avenue to work. Instead, crypto people have to just wing it. Just wing it. And then they come back later and bust them. Exactly what they did to Reggie. By the way, if you didn't know, the Veritasium tokens, 98 million of the 100 million tokens, are still frozen by the SEC with no explanation of why. They took all his other assets and sold them off. But why are Veritasium tokens? And, oh, by the way, everybody's, Reggie will just go invent another token. He can't. By law, they said you cannot issue another token as part of the settlement. So either these tokens got to go back to Reggie, or maybe the U.S. government will use them and his technology. But he can say no to the government even because he has the patent. The government doesn't have the patent. Reggie's got the patent. Very complicated. That's why I call it's a lottery ticket. If Cliff High is right and Veritasium goes 1-to-1 with the price of Bitcoin, it's a lottery ticket. You bought a lottery ticket. Veritasium's like $30 now or something like that. And it's really hard to get. You get it on Mercatox. But you go there, you put, try to buy $5,000 worth of Veritasium, you're going to jump the price, 20, 30%. It's so crazy lightly traded. That's the world we live in, my friends, and that's the world we try to navigate on the road to Roota. You want to join the road to Roota, get all the behind-the-scenes actions, go to roadtoruta.com, hit subscribe today. Also, I have a free newsletter. On the left side, put your name and email, and I send out almost daily updates on where we are, as well as links to the videos I do on YouTube. Click like, click subscribe. I'll talk to you guys later.